Round. Verizon is rolling out Fios. This is its new fiber optics network, and AT&T is improving its current system. But are the telcos keeping up with growing competition from cable? Breaking down the sector with us is Craig Moffett, senior telecom and cable analyst at Sanford C. Bernstein, and Todd Rosenbluth is telecom equity analyst at Standard & Poor's. Guys, good to see you.
Good to be here.
Guys, we've been hearing so much about this Fios. This is Verizon essentially rolling out television, high-definition television, right, Craig?
That's right. They're deploying what is they refer to as fiber to the premise, or fiber all the way to the house, in something like half of their footprint over a period of about 5 years. So by the end of 2010, they'll have done a little bit more than half of their subscribers, where at least they have the capability to connect to the Fios network.
Is that a good thing for the stock?
Well, it's a good thing for consumers. Whether it's a good thing for the stock is a different question. It doesn't look like they can earn an acceptable return on that investment, just given how high the costs are. Right now, by the time they're finished, they will have spent about $23 billion. It's about $18 billion of that is incremental to what they otherwise would have spent. And it comes out to more than $4,000 per subscriber.
Wow.
It's a very good service for consumers, but it doesn't look like it's such a good deal for shareholders.
Todd, what do you think in terms of being a Verizon shareholder? Do you like the fact that they rolled out Fios? Is it going to help them make some money?
We do. You know, we at Standard & Poor's, we have a buy recommendation on Verizon Communications. You know, they're fighting an aggressive battle with cable companies, but this is a company, Verizon, that's got nearly $100 billion in revenues each year. It's growing at mid-single digits. They have to invest to compete with the cable companies of the world, the Time Warners, the Cablevisions. Otherwise, they're going to lose a lot more money. We think they're providing shareholders with a dividend to support them. They're buying back stock. This is, we think, an appropriate investment, and we think shareholders are going to benefit from it over the longer term.
Craig, what about AT&T? What's their strategy when competing with the cable companies?
Well, AT&T's strategy is a little more moderate. They are also pursuing a video strategy, but a lower-cost video strategy. So while I think Verizon is pursuing a strategy that is almost growth at any cost, irrespective of return, AT&T is taking a more measured approach that says, Let's reinvest a more moderate amount of money. Let's try to maintain this business while we can, but let's try to shift the focus of our portfolio away from this wireline business and toward a better wireless business that is clearly has better economic fundamentals.
And Todd, from what I can tell, you like AT&T even better than Verizon. You've got a buy on Verizon, but you have a strong buy on AT&T.
We do. We think the valuations for both AT&T and Verizon are compelling at this level. Again, mentioned the dividend that Verizon has. AT&T has a similar kind of dividend. They're buying back stock. They've got cost reductions. We think the fiber investment is part of what the telecom companies are doing to compete with cable. They've got wireless in the bundle. They're having some success with broadband and holding on to existing phone customers. We like AT&T. We like Verizon. There's a few other stocks in the telecom space that we favor. A lot of these stocks have been beaten up. And as an equity analyst at Standard & Poor's, we're recommending investors buy both AT&T and Verizon.
Todd, what do you avoid?
At the moment, there's not a lot of things in telecom we don't like. Standard & Poor's has a negative recommendation on U.S. Cellular. It's a wireless company. We've got a hold on Quest Communications. That's in this Verizon AT&T space. They just don't have enough of the positive developments to offset the challenges in wireline.
Craig, what do you think about the cable companies?
Well, actually, I think the cable companies are still a better bet than the telcos, even though they've had a very good run this year as the telcos have pulled back. You know, look, fundamentally, here's the issue. The cable operators have a plant that has a few thousand times more capacity than the telephone plant. They have a plant that operates at about half the operating cost of the telephone plant. And most importantly, they have a plant where you can do voice and data that is all the things that the telephone company plant does on the existing plant without any incremental cost. And so they have a huge economic advantage relative to the telephone companies. The telephone companies are scrambling as fast as they can to catch up, but you're still talking about less than 40% of the country that's ever going to see these fiber plants to compete from the telcos to compete with the cable operators.
Yeah, they just got to figure out some other strategy besides landlines, which is how they used to do it. Guys, good to see you. We really appreciate it, Craig and Todd.
Pleasure to have you.
Barack Obama.